Welcome to another episode of Real Talk with Realtors about real things, real stuff, and whatever else we feel like talking about. So today we have a very valuable episode about economic forecasts, what are rates predicted to do. We're going to talk about home price appreciation, and I would advise you not to buy a home until you listen to this here podcast.
Don't do it. Don't give it.
Don't.
Sorry. I learned a new word or a new phrase and I'm not doing it right.
It's
I'm
giving scare tactics.
Oh, it's giving scary tactics.
Headlines.
Okay. It doesn't still make sense to me, but that's fine.
I'm going to keep using it so we get the hang of it.
Okay.
Okay. So
I don't want to get the hang of it. You get the hang of it.
Come on. I'm keeping you young.
Oh, okay.
And love is blind is keeping me young. So why don't you start off, Bran, about what we learned?
Well, all right. One of the things that keeping current matters, so who we love and listen to regularly, brought up a great graph that we're hopefully showing on the screen right about now, that when the feds were trying to reduce inflation because it had spiked, they basically lowered the interest rates way too fast. So it had, in the 70s, it had gone way up. They tried to adjust, it went back down, and then it shot right back up again because they did it too quickly, according to what those smart people say about the past. And so today, that's kind of what they're trying to avoid is if you look at this graph in today's market or in today's what's happening with inflation, it has dropped significantly. We're almost there,
I know,
but not quite. Yeah. So they're just kind of holding off and waiting to make sure that they don't jump too quickly. But then others say that maybe they don't think it's necessary for them to continue to either keep rates as they are or increase them because we have gotten to our goal in terms of employment.
Yep.
And stabilizing of inflation.
Yeah.
So I guess they just don't want to move too quickly is the bottom line on that first point. They don't want to start reducing rates and then go, oh, shit, we should have waited.
That was a little too fast. And they're learning from the mistake that they made in the 70s doing that. And then we remember in the 80s when rates were really high. I've only heard about that, but
I don't even remember because I was a teenager and didn't care, but yes.
But, we all know in the 80s rates were 13, 14, 15%.
Right.
And so that's probably because of this situation. Yeah. There are some that believe they kept rates too low in 2020 for too long. Correct. And obviously printing a lot of money. And Jerome Powell himself had said, this is your one and only opportunity to print money. So print money. And then they did. So that obviously contributed to the inflation issue that we're having today. But we're getting down there. And I think it feels slow. So it feels like it's going to be a soft landing unless there's something unprecedented that happens. I think they're doing a pretty good job. As realtors, it would be really nice to see the rates get down to 6.5, something like that. Seems a little bit more stable. Right. And it might help free up some homeowners that aren't selling because of their 3% interest rate. It might soften the blow for them a little bit if they are needing to move. Yeah. But they can't do it because they're stuck in their house because they don't want to give up that interest rate. Yeah. Which is, I don't blame them. Don't blame them at all. And that kind of goes into when you mentioned soft landing. The Wall Street Journal did a survey last year in January and this year. So at that time, 61% of the economists thought that we were going into a recession, and 39% thought we would have a soft landing. That same survey taken in January 2024 is flipped. So 61% of economists think that we're going to have a soft landing. 39% think that we are still going to go into a recession. So just kind of interesting prediction or thoughts on that. Yeah, that is super interesting. Well, do we want to go over a quick outlook for mortgage rates via Fannie Mae's predictions? Yes. So for Fannie Mae reported in Q1, the average interest rate for 2024 was 6.5%. They predict Q2 to be 6.3%. I guess we're still in Q1, so they're saying it will end up at 6.5%.
Q2, quarter 2 will be 6.3%. Quarter 3, 6.1%, and quarter 4, we could touch 5.9% on average.
Right.
So that means it could, some of the last quarter of the year, we could see it dip below 5.9, which would be nice, but then it's going to unlock a lot more buyers. However, I'm interested to see what the dynamic's going to end up being with the election, because traditionally when we have an election year, it really slows down in that time period. Last quarter. But if rates are low enough, then people might go, well, this is my opportunity, let's jump in, and they might get a good deal on a house too.
They might, but our inventory is typically low that time of year.
Yeah.
So
but if days on market are trending longer, then they might be able to, it's a deal.
I don't foresee
speaking.
the days on market though trending longer in Q2 and Q3 because
I'm saying Q4.
Right. Yes. So at the end of Q4, if it's the days on market are longer, but that's not a huge, if this prediction is accurate, that's not a big difference. 6.1 to 5.9. No. And so you're going to have less inventory, potentially have to pay more. I mean, nobody knows. At the end of the day, if you need to buy a house and you want to buy a house and you can afford to buy a house, you should buy a house. You should
not
wait.
It's all about the monthly payment.
Yeah, exactly. You should not wait until Q4 when potentially, when we say Q4, we mean the end of the year, in case you don't know.
October, November, December.
Yeah, right. So, yeah, no, that's interesting predictions. Yeah. We'll see how that all shakes out.
And you know what's interesting is it's not a huge movement in rates. Even from 6.5 to 5.9 on average, it's not, even from 7%, which we've been hovering around, down to 6%, it's a difference, but it's not, I wouldn't call it like monumental, but just getting sub 6 or close to 6% is going to drive prices up.
Right.
Because it's just going to send more buyers into the market.
And not to get too off topic here, but there are other ways to get your rate down.
Yes.
So you can have, if you're a buyer, a seller could offer to buy your rate down by paying some closing costs for you. If you're working with like a mortgage broker versus a banker, you might be able to get some better deals. I mean, there are some ways to get that rate, but that's kind of going off on a tangent. So let's get back into our...
But it's still, I mean, you can ask us or your realtor about that, or your lender, right, and get some information.
We didn't touch on unemployment. There is a really great graph here that shows unemployment is expected to stay below 5%. So
yeah, in 2024, which bodes well for the economy and the housing market.
Right. And then even at their prediction in December of 26, I don't know how they come up with these numbers, but they're just is less than 4%. So we'll see how that goes.
So if we can continue that and have inflation come down, that's going to be really good for our economy. So those 61% saying that we're not expecting a recession are probably banking on the fact that those two things will be true.
Right. Yeah.
Okay, let's talk about foreclosures.
Yeah.
Because that's always a hot topic.
They were all coming.
They were all supposed to come.
Especially during like the pandemic.
Because no one was going to be able to work, so no one was going to be able to afford their payment. So then they were going to be forced to foreclose.
And they put a moratorium on foreclosures though. So
so that plan didn't pan out.
Thank goodness.
Thank goodness.
Exactly. So this graph shows us 17.2% fewer foreclosure sales as compared to the previous year.
Yes. And 25% below pre-pandemic levels. 25% less foreclosures than pre-pandemic. That's a huge number. And so currently we have, it looks like on that graph, a slight uptick in foreclosure activity. However, it's still, leaps and bounds below where it was the years leading up to 2020.
Right. Yeah, there's another graph here that shows 2009, 2.9 million. I'm sorry, this is actually 2010. 2.9 million foreclosures in 2010. And in 2023, there were 357,000.
Wow. So. Yeah. Wait, this ain't no 2008.
Right. And I know we've said this before, but this is my favorite thing to reiterate over and over again. And it's about how much equity people have in their homes and why foreclosures won't be a thing or shouldn't be a thing. So for example, if I'm in trouble and I lose my job or something happens and I have $200,000 worth of equity in my home, which most Americans do, I'm just going to sell it and go rent somewhere and take my money. I'm not going to get foreclosed on.
Right.
I mean, it's just would be very unusual for that to happen. But I just am always baffled at this. Almost 40% of Americans that own a home own them free and clear. 38.7%. And then 28.7% have over 50% equity. Mm-hmm. And then the 33% have less than 50% equity. I mean, this is just something that I think is amazing. It's the American dream.
It sure is. I wonder what the age demographics are of those people.
That's a good one. Well, they're definitely going to be older. I mean, that makes sense, right? They're going to be my age or older.
Yeah.
Which I own my house free and clear. I know people that do, though.
Mm-hmm.
That
and those
are even my
people
age.
are not foreclosing.
Yes.
And nationwide, we saw homes appreciate 5.5% to 6.5% in 2023, which a lot of people, probably the same people who thought foreclosures were going to flood the market, thought that we were going to see depreciation last year because interest rates went so high. Mm-hmm. And honestly, to a lot of people's surprise, they didn't depreciate or go down. It didn't go down, period. It's very relative to your marketplace. But nationwide, we saw 5.5% to 6.5% appreciation 2023. And it's a healthy rate of appreciation. Right. It's higher than your average level from before the pandemic, but we're not at that double digit mark that we were in 2020, 2021, 2022. So that's good.
Right. No, we're not seeing 15%. No, we cannot. This is normal and healthy. Yeah. And if you are able to see this graph here, the reason why these are all the different, let's see, what would you call these? Numbers.
Averages.
Yeah. Averages, thank you, that came out from different companies, but they all measure things slightly differently. Yeah. So anywhere between a 5.5% and a 6.6% increase. And there's another graph that they had that showed in January of 23, we did have a slight dip in like 0.2% depreciation in 2023. All the other months were up. So, yeah, and even in the big cities, like you had said, even Dallas had appreciation. Yeah. Yes. Dallas had 2.1%. Denver had 2.3%.
So those cities that saw the biggest boom during the pandemic and everyone thought they were going to come down in price really didn't. I think this year they are seeing a little bit of, it's not clearly it's not depreciation, but maybe price is not going.
Yeah, I don't see Boise, Idaho on here. So that's probably a lower number.
So depending on your metro area, but here in Chico, the last year, we really didn't see a lot of increase or decrease. It stayed pretty steady over the last year. I mean, when we're running comps for listings that we're trying to price, I am going back a year still for some of those and feeling comfortable because we don't have a lot of sales to go off of. So we kind of need to go further back. And if there was a huge price difference, I wouldn't go a year back, but there's really not if you look at the data.
No. And if you're really looking just to see, you can also go back to 2021. I mean, we don't want to do that, but I do check it just to see because I feel like which was still an amazing market, right? That's when things were jumping up 10, 15.
2021 was wild.
There's also this great graph. What's this? This is from Freddie Mac that shows how over the last 35 years, we've seen appreciation except for 2008, 9, 10, and 11. And that's obviously when we had the big crash. But right now, we are still above average, as you had mentioned before. We're still above average on appreciation. So this is another
from over the last 35 years.
Right.
Yep.
That's longer than you've been alive.
Barely.
So that's a really good... Not barely.
At this point.
But it's a really good, strong amount of time to get this information from.
Yeah, so, absolutely.
I always love, this is my favorite thing to listen to when I am studying the market is Keeping Current Matters.
Yeah.
Keeping Current
Big
Matters.
shout out.
Yes.
Okay.
All right. Well, there's all sorts of other information here that we could talk about, but I think we'll
wrap it
covered.
Up there.
Yeah.
Yeah.
So what's your prediction for 2024?
For Chico?
Yeah.
I think we'll see prices go up like 5 or 6% overall. What about you?
I'm thinking 3, 4, maybe 5%, because there are still those homes that are sitting. Like we are getting multiple offers on some.
Yeah.
But I think what the general population needs to understand, that if they're scared, the people that are on the fence is that, again, if you are ready to buy. If you can afford it, buy it, because I don't foresee the prices. They're not going down.
They're not coming down.
Simply do not have enough homes to sell.
Yep.
So I think they're going to increase a little bit, but maybe like 3 or 4% is.
It'll be interesting to go back and segment it for like the
Price
400
points.
range.
Yes, I knew you were going to say that. Yeah,
because it's so different, and I work with a lot of people in the 4 and 5s.
Yes,
and
that's the sweet spot price where a lot of people can more people can afford that. I won't say a lot of people, but more people are in that price bracket than they are above that.
Yeah, and there's people, first-time home buyers are moving into that bracket, and then also downsizers are moving into that bracket. So it kind of gets pressed from both ends, and it tends to see more appreciation than obviously our luxury market.
Definitely. Really good point. You're so smart.
Thanks. So are you. All right. Thanks for tuning in. Let us know if you have any questions, of course, about any of this stuff. We'd love to hear your opinions, and let us know if we can help you buy or sell a home. Thanks.
Peace out.